Avan. In fact, especially on the revenue front, Avan, it's quite below. If you look at the revenues, it's growing at 0.7% quarter-on-quarter in constant currency terms, and we were working with a revenue growth of at least 1.7% quarter-on-quarter in constant currency terms. Again, if I'm looking at the overall profitability, it's fairly below our expectations. 1,081 crore is the profits, while Etinapol posted or expecting a profit of 1,300 odd crore. So both on the profitability as well as in terms of the revenue front, it's fairly below our own poll estimates. 16.5 is the EBIT margin. So I'm just wondering then what exactly has led to better than expected profitability, because margins at 16.5. This seems to, I just have to recheck if this is EBIT margin or EBITDA margin, but if margin of 16.5, then it is significantly our estimate. So as I'm opening the press release, just give me a moment as I recheck that. But on the face of it, Avan, at least on the revenue as well as the profitability front, what again we need for in terms of the FY20 guidance on both revenues as well as margin front. And as I'm looking at the press release itself, for the entire Q4, the revenue growth, as I said, is 0.7% quarter-on-quarter in constant currency terms, and revenue growth in dollar terms has been at 1.6% quarter-on-quarter. Margins again have been for the entire year, the margins have been good. The board has proposed a final dividend of rupees 15 per share and a special dividend of rupees 15 per share, in addition to the special dividend that they had declared earlier. So total dividend declared so far for FY21 is rupees 45 per share. And do note, Avan, most of the analysts were also stating that from a payout ratio, Tech Mahindra definitely has done well, and there has been significant amount of improvement from a payout perspective. Overall, if I'm looking at the it is at $187 million, and the free cash flow conversion to PAT also is fairly good at 127%. EBITDA stands at 1948 crore, which is a growth of 2.8% quarter-on-quarter. Harish, what do you make of these numbers? We are clearly seeing that both on the especially on the revenue front, it's a significant miss. How do you read these numbers?
Yeah, hello.
Yeah, Harish, am I audible to you?
Yeah, Harish. Yeah,
hi, Harish. This is.
Yeah. Yes. Okay, so I think what I understand, the revenue was a little bit slightly softer than what you were expecting, although we did expect a soft number, given that there were the projects that were in the first quarter. So, I mean, there were some projects which completed and there was no backfill out there, so that, kind of was expecting a slow quarter. So this is a little bit below expectation. Expectations in this, but I think we as far as the margins are concerned, I think that is more or less safe. Clearly they are looking to continue to do that, until we clearly should see, some spike in wage inflation and possibly return of some cost, which was absent this year, particularly travel or some sort of, with the
Right, Mr. Kulkarni, my question would be to you. How are you reading reading results? It's clearly a miss in terms of the revenue front, but if I'm also reading the CFSO's quote, which is CFO Milind Kulkarni of Tech Mahindra states that we have witnessed substantial margin improvement and cash flow generation this year. Our focus on delivery transformation will continue as we increasingly witness a structural shift towards digital to adapt to the new normal. We are positioned uniquely to gain from this shift while improving our financial and operating metrics going forward. So, Mr. Kulkarni, what do you make of the results so far?
Hi. So basically, revenue is a bit of a miss versus our expectation, largely because of slight underperformance in communication vertical, and which was expected because last couple of quarters their deal wins were comparatively weaker compared to the larger peers. But if you see the deal wins in this quarter, this number is around 1 billion, which is substantially higher than the last quarter. And additionally, the EBIT margin, 16.5%, is ahead of our expectation. So I think the deal wins and the EBIT margin, the EBIT margin beat probably a dominant story of this result. And as you read out the comment, the transformation deal wins and recovery in communication vertical will probably play out well for them in the next year.
As well as Mr. Kulkarni, if you're looking at the Q4 EBIT margin, definitely it is a beat, 16.5%. The net new deal wins stand at $1.04 billion. I guess even the net new deal wins are significantly higher because some of the analysts were working with a number of $800 million. So in Q4, it's a net new deal wins of $1.04 billion. If I'm looking at the further breakup of the revenue growth on a quarter-on-quarter basis in the communication vertical is at 0.2% and minus 4.3% YOY in constant currency terms. And enterprise revenue growth has been good at 1.1% quarter-on-quarter as well as 2.1% YOY in constant currency terms. Again, just for the benefit of our viewers, if I'm looking at from a segmental perspective, BFSI has clocked in a 4.9% growth. Retail transport vertical is down 3.2%. Technology vertical is subdued, just around 0.5%. Communication and manufacturing vertical have done well during the quarter. Within the geographies, again, America is down 1.3% and Europe is up 2% and rest of the world is up 6.2%. So, Mr. Kulkarni, do you think this kind of an EBIT margin performance is likely to continue up 6.2%? So, Mr. Kulkarni, do you think this kind of an EBIT margin performance is likely to continue? And also, what do you make of the net new deal wins, which stands over $1 billion?
So firstly, on the EBIT margin is 16.5% is a great number this quarter. Going ahead, we see some pressure largely because of the wage inflation of the next year, and secondly, the travel cost and other costs coming back in the picture. Secondly, in terms of the net new deal wins, so net new deal wins, deal win number of 1 billion is a strong number. The exit and they also recorded a few large deal wins also during this quarter. I believe that provides a strong visibility for FY22 revenue growth number.
All right, thanks so much, gentlemen, for joining in and sharing with us that outlook. So on the face of it, it's been a bit below what the street was penciling in for Tech Mahindra's quarterly numbers. But let's